Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. It's time to update our view on the cryptocurrencies and Bitcoin in particular. So this week market mostly was standing in a tight range, so we do not see any significant impact on the higher time frames, on the weekly and the monthly chart, where picture mostly stands the same. And markets, the whole week were standing around the released CPI numbers, and there was lots of noise in the mass media concerning this data, these numbers. So lots of talks and discussion was whether this really could bring the significant shift in the overall shape of the market performance, not only cryptocurrencies, but the classical market and stock market, bond market, how it could make impact on the Fed policy and so on. So all major things we have discussed in our weekly reports on the Forex and to the gold. So the Bitcoin has some specific on reaction on statistics, and well, it behaves a bit different compared to classical markets. So that's why here we can't say definitely whether what the reaction will be if inflation keep going higher. So, but even based on the recent reaction, we suggest that definitely it will be negative for the Bitcoin market, because although reaction on the Bitcoin was not as strong as on the, say, on the gold or maybe on the euro currency, but still it was negative, and it means that it's still sensitive to statistics. So currently the major consensus is that within the December we should get even higher numbers on inflation, which means that whether we would like to or not, but it seems that inflation still will become the headwind for the Bitcoin. Maybe it will not cancel the rally, maybe it just will be some, like the headwind, right? So it will make some pressure on rally that makes it a bit slower, but currently we do not think that could reverse it totally. So it means just that in the moment of the release on inflation statistics, we should be ready for some volatility, and some drawdowns here could happen in the moments where inflation really will be high. So some short-term reaction on the cryptocurrency could happen as well. So as I said, market stands mostly in a tight range, so that's why the major thing that we're interested currently is a retracement that market stands right now. Because on the higher time frames, mostly the same. As I said, market's going around the top. On the weekly chart, so also you can see that here's some problems with our prediction. First was the overbought. Currently, the inflation release also has pressed on the market, and as you can see, it's a bit difficult for the market to proceed with the same pace it was formed here. That makes me think that chances on the deep retracement still exist. The price action mostly stands in a row with the scenario that we discussed last time. So take a look on the daily chart. Trend still stands bearish here. After the bottom has been formed, market shows the collapse of the reversed candle, reverse bearish session, and here we see some pullback to some intraday level inside of this range. So this is not the type of action that usually signals about ending of the retracement. Market is ready to rally. So usually when this happens, you can see this market starts moving with acceleration to the upside. Here is a bit different story. It's very choppy price action on the intraday chart, which makes me think that the chances on some kind of the A, B, C top D retracement, let's say in the shape of the ABC, is not really small. So these chances are, we think that they're solid. So it could happen. At the same time, we should be ready for any scenario, right? So if market will somehow, maybe some external news will be released, who knows, we'll be ready for a rally. We should also know that rally started. So for that purpose, we have prepared few scenarios that we need to keep an eye on, and to control the vital points of this scenario that tell us what is going on in the market. So on the 4 time frame chart, you could see that in general we could get, if let's start from the first scenario with the deeper downside action. Here the major level that we need to keep an eye on is 66.46 approximately, 66.45. It's right here, the major 618 resistance, wall downward action. Market shows clearly the ABCD retracement back to this level. So potentially that could give us the catalyst people to sell. And if you have the bearish view, you would like to sell, that's the point that you need to keep an eye on. Once market will show the technical response, technical respect to this level with some minor pullback, that's the time to move stops to the break-even. So once you will do this, then you just could see what will happen next. So if indeed downward action will start, that's great. You will get some great result on this trade. If just minor pullback will happen and market returns that back up, so it will just bring you no loss, and you will, in this case, definitely know that market is keep going higher. So the retracement is over, and we should be ready for the further upward continuation, at least back to the top first, but then maybe an upward continuation. So that's why this level is important. If you have the bearish view, that's the point and level that you need to keep an eye on. So this is agreement with the major fib resistance, and that should trigger at least 30% bounce. Besides, this is catalyst equal to sell pattern, which also suggests at least 30% retracement. This is scenario for the bears. Some weak moment of this scenario is that we have this acceleration. So you can see here the market has shown some faster action compared to the AB leg, which tells that at least increased chances that after the reaction here, market still could keep going higher. So, but this is actually doesn't change the overall scenario itself. So this is just a sign that you need to consider that should become the reason why you need to manage your position and move stops to the break-even as possible, because here exists some chances, some risk factor for this acceleration. That's about the bears. Speaking on the bullish scenario, let's take a look. Actually, the shape on the bottom, right around the major support. So in general, what stands in favor of the bulls? The market stands at relatively tight support area. So it tested this natural support resistance line, and in general, if you take a look at the previous top, as we said, market in general is coiling around the stop. So actually, it has retested it and returns that back up. So this is supportive factor in general. It's positive factor for the bulls. On the hourly chart, the bottom of the current consolidation takes the shape of the reverse head and shoulders, and market actually almost has hit the nearest target, the OP target of this ABCD pattern, and the target of the head and shoulders. So the level that bulls need to control stands around 65. So this is 64.70, 64.85. So roughly 65. So because here will be the trend line, this neckline of the head and shoulders right here, and that will be confidence support. So if market indeed is bullish, it should not break this level to the downside. So on retracement, once the OP will be reached, the target of this ABCD pattern will be reached right in agreement, starting of the pullback, it's normal retracement, control this level, and that will be also the level that you could consider for taking the long position. Because if market will stay above it, it keeps chances to go to the next target of the head and shoulders, which actually stands right around the previous top, so around 69. Potentially also might become the upward continuation in general. If market will break it down, this will be very strong bearish signals, suggest that probably first scenario is prevailing, and we are going with some A, B, C, top, D pattern to the downside. So these two scenarios stands on the table currently. So depending on your view, you of course could try both of them. So if you trade especially on the intraday charts, you could try to go short first, then keep watching what will happen here. Market starts to reverse. You could reverse the position, grab some result here, and be possessed for upward action. So Here's two scenarios that you could follow depending on the view. And these levels that we have specified, first of all, 66.50 and 65. That will be important in the short term, and they could clarify the further direction on the cryptocurrencies.